The rules I follow while trading with expert advisors is what keeps me profitable. It's not the EAs or the strategies, it's also not the capital you trade with. It's all about the rules you follow and the discipline you apply. This is why we decided to display all of our rules publicly on the Algo Trading Space platform, and I will explain all of them just in a minute, because the profitable results you see on the Algo Trading Space platform in all of my accounts are a result of good risk money management, and all of these gains wouldn't be possible if I weren't following those rules that I created after 10 years of trading manually and with expert advisors. And if you guys missed to subscribe to this channel, please double check, because it really helps me a lot to gain the capital to trade more and more live trading accounts, to test and test more EAs, because I reinvest 100% of the profits into new EAs, new accounts, so we can all see together which are the profitable ones. Thank you. And before I show you the rules, I actually noticed while recording this video that the Forest Gold Investor gained another $900, and one of my first rule is that if I make 20% in any of the accounts, I just withdraw the profits. And here the initial deposit is $3,200, and I've requested withdrawals a couple of times, so you can see that this is a withdrawal, a second one, a third one, and now again I have profits. Here is my live account, and you can see how much is the deposit, how much is the profit, the withdrawals, and here are all of these recent profitable trades. And just in my other browser I will transfer the amount of $915, and here it is. I've made the withdrawal and my balance is back to $3,000. This is where I feel comfortable trading the Forest Gold Investor, and I've already made more money from this expert advisor than the money I deposited in the account. But now let me show you the rules, because they are crucial for me. And if I just refresh the website, you will see the changes are here with the Forest Gold Investor, and that's thanks to the Space Tracker EA, which I'll show you in a second, and it's already available for our VIP users. But let's go straight to the rules. The one thing that has been very important for me since the beginning is to test all the expert advisors on real trading conditions. But there are a few things we need to do before putting the EA on a live environment. First is we want to make sure we test it on a virtual account, or that's the demo account. And my team is looking for expert advisors if they have 2 out of the 3 things: free trial, 30-day money back guarantee, or verified track record. If the vendors do not provide 2 out of the 3, we don't bother even testing it. Now, after we put the EAs on a demo account, we're following the performance through the Space Tracker, which is the newest development from Algo Trading Space, where we can filter all of our accounts. So for example, I can select the demo accounts. I want to see those that make more than 2 to 5% or even above 5%. I want to see those that executed over 30 trades and have been running for over 30 days. And you can see a list of expert advisors that are trading on demo, and from there we can arrange them according to the monthly average profit or the drawdown. But now it's just much easier for me to backtest the expert advisors that make over 2% a month, has over 30 trades, and trade over 30 days. If we don't see this initial proof on a demo account, we don't even bother backtesting it. But if it shows profitability for 30 days, for over 30 trades, then we are happy backtesting it. And based on the backtest results, we decide if the EA will be traded on a live or on a funded account. For the funded accounts, we need to stay with the drawdown below 10%, and with the live accounts, we allow drawdown of 50%. And that of course makes it harder to trade expert advisors on funded accounts, but with platforms like iFunds, for example, I'm requesting withdrawals regularly, which means that it is possible as long as I am trading expert advisors that stay with low drawdown. What I like about iFunds is that there is no limitation about daily drawdown, IP restrictions. Auto trading or EAs are absolutely allowed, and based on my risk appetite I can decide if I want to trade it with a higher profit split, but this decreases the drawdown, so I usually stay with 10% drawdown and 50% profit split. And you can pick any account size. Basically we purchase the account, so for example you can purchase a 5k account for $400, 10k account for $700, and there are more expensive plans if you are comfortable with the strategy or the EA used. However, I would suggest that you give it a try with the small ones, so you're not risking huge capital at the beginning. And the best thing of course is that they pay out immediately. That's my withdrawal history, and usually at the end of the month I would look into the accounts, I would go to funded trading, and I would just withdraw any profits if I arrange the iFunds accounts on the top, any profits that are above, let's say, $400. So for example, the Euro Yen EAs from the top 10 app already made about $400 as a profit, so I'm happy withdrawing these. There is a drawdown with the dark algo, but if that recovers I'll be withdrawing another $400 from here. The happy frequency also made about $400, so I will be withdrawing these probably at the end of the week. But the idea here is that with all iFunds accounts I have, once I have $400, $500, $600 of profit, I just withdraw it. I don't wait to grow this account because I want to make money from trading, not to show big accounts with big gains. And my goal is to achieve 100 accounts with 100 EAs. At the time of recording this video, we have 59 accounts. Some are with bigger deposits, others are with smaller, but most of them are with $1,000. So I really want to achieve this diversified portfolio of 100 accounts where I'll be trading 100 EAs. And even if one expert advisor is very profitable, I stick to the rules where I don't want to have more than 5 real money accounts per EA. So it could be a small account, a mid account, or $1,000 live account, and then iFundstrading.com or Darwin X0 funded account, but no more than 5 accounts per EA. Also, I allow 50% max drawdown for the grid martingale systems and 25% max drawdown for the fixed non-grid lot trading EAs, and 10% risk for funded accounts. If there is a huge drawdown, the target, I already said it, 20% target withdrawal, or if the EA makes 2 or 3% a month, or I'm happy withdrawing any profits quarterly. Now, when it comes to the account size strategies, on a small $200 account, you can't trade everything. You can trade gold with fixed 0.01 lot or one pair with fixed limited grid. And obviously in a small 200 account, we are risking the entire capital. And once we make 50%, we request a withdrawal. So for example, in this small $200 account with a gold scalper, it started with $200. Once it made 50% or it reached above $300, we've requested the $100. And with a $500 account, we still target 20%, just like with the $1,000 live account, and we allow 50% drawdown. Obviously on a $500 account you can trade gold with grid, but it should be just 0.01 and a few recovery orders, like 3 or 4 maximum, not too many, because you won't have enough margin. On the $1,000 live accounts, it is suitable to trade grid martingale systems, but it should be with one symbol only. If the EA trades more than one pair, it is always better to separate into different 1k accounts each pair, or if you want to trade them together, the minimum deposit should be $3,000. And the reason we've made all of our results public is because we want to save you the time for all of that. But if you still prefer to backtest the strategies yourself, which I strongly recommend stay with me until the end. This is because we also displayed the rules for backtesting. Because once we put it on a live account, we don't stop there. We still monitor the account, and if the account trades over 90 days and performs less than 2%, we evaluate the backtest to see if we can increase the risk. So basically I would switch to live accounts in the space tracker, and then I will look for those that make below 2% and they traded over 90 days, and you can see that there are such expert advisors in the portfolio. So we are currently backtesting all of these, and we want to see if we can increase the risk. And the same thing applies on the other side. If the account trades over 90 days and it makes over 5% a month, that is probably too risky setup we used. So what we would do in this case is, again, we will revalidate it, we will backtest it and see if the account is overexposed and if we should be lowering the risk. And below are the rules for the demo, for the backtesting, and for the qualification. As I said, we want to see on demo account 2% a month or profit factor of 1.2 for over 30 days and 30 trades. And we usually start with the vendor's recommendations, asset files, or we just want to see how it performs with 0.01 fixed lot on a 10K account, and this is where we would be looking at the profit factor. Then we backtest it and we want to compare the results with the demo account, if they align, and if the EA qualifies for a live account, we would trade it. Now the risk configuration by account type is pretty simple. For the live accounts, we target 2% minimum, so that's a minimum target monthly return. The max drawdown we allow is 50%. Of course, if the EA makes more, that's great, but 2 to 5% is very reasonable. For the funded accounts, because we have 10% max drawdown, this means that we need to target 5 times lower, or that is about 0.4 or 0.5% in the funded accounts, and we achieve 1% by combining a portfolio of EAs, and I will share with you what is the iFund strategy, the trading.com strategy in a second. But really, if we make 1% a month, that is good enough. And with the prop firms, the same thing, because the max drawdown is even lower, as you know. So what's the strategy for the funded accounts? If we achieve 1% a month with a portfolio of, let's say, 3 EAs per account, and if we apply this to the 10K account that costs $700, 12% a year is $1,200 total profit. Now the profit split is 50%, which means that we will be withdrawing $600. But pay attention here, we paid for the account $700, so the annual return represents approximately 85% of the initial account cost, or $600 return on a $700 investment. So here we are really looking for steady and controlled growth. Now with the trading.com account, again the monthly target is 1%, but the target here is 20%, and to achieve that a little bit faster, we are using a scaling approach. So when the portfolio reaches 5%, we increase the risk 2 times, because at this moment the max drawdown is already 15%. Both trading.com and iFunds, they have static drawdowns. So if in the first 5 months we make 1% a month, that's 5%, and then in the next 7 months we make 2%, that's 14%, or in 12-13 months we would be achieving the 20% target. And as I said at the beginning of the video, it's not about the expert advisor you use or the strategies behind the EAs. It's all about the right mindset, and we've put a few tips at the end. So the first one is the first rule: test any EA on a demo account, even if the Algo Trading Space team tested it. Number 2, start with low risk. Even if you start with the lowest risk possible on a live account, that's better, and from there you can increase slowly depending on the performance. Number 3, make sure to build a diversified portfolio, not to depend just on one EA or one strategy. The portfolio allocation in our team is about 70% live trading, 20% funded trading. These are platforms like iFunds, and we put put just 10% into prop trading. At the end, you want to have your final check, and the easiest one is no stress, which means that if you started an account and you're just worried about it, then you've taken too high risk. Lower it. Just lower the risk to trade stress-free. Number 2 is to accept the losses. I also lose account from time to time, but I have realistic expectations because I know how much exactly I can lose. In my portfolio, I primarily trade $1,000 live accounts with a 50% drawdown, which means that if I lose one of these accounts, I am losing just $500. I have accepted that, and I know that it can happen. And number 3 is to manage the gains. Withdraw regularly, reinvest, or spend the money for something nice, and just keep diversifying. Building a portfolio of expert advisors is an ongoing process, something we've been doing in algo trading space for years. And we will keep doing it because this is the only right way to trade on the market with expert advisors. And I believe this is the only way to participate as a trader, or at least the only way you can find where you will remove the stress from your head. If you want to see how the Forest Gold investor performs compared to one of the best Forex expert advisors on the market, check out this video on my site, guys. As always, trade safe, don't forget I love you, and I'll see you in the next video. Bye.